The indices are making one of the most powerful bullish reversal signals, which may be triggered this month. December is a promising month, despite the strange reaction we are seeing in the market recently. In the short and mid-term, we still see some conflicting signals, which makes the situation quite challenging, but we can still find some sense in this mess. And this is what we are gonna try to do in this video. Welcome to the Finance Hydra channel. My name is Nathan, retail trader. Very nice to meet you guys. And yes, this over here is the best bullish chart structure we could ever possibly ask for, all right? Because this is a crystal clear bullish pivot point, a higher high, higher low, and it is the first bullish pivot point. See here, higher high, higher low. It is the first bullish pivot point since the S&P reached its all-time high in January 2022 when it started its bear market over here. So yes, this is a very important bullish reversal structure, one of the most important we have seen in the past few years. So yes, this is a very promising and a very good bullish reversal chart structure. Long-term speaking, I'm not saying short and mid-term speaking. This is the monthly chart. Remember, every single candlestick represents one entire month. So on the monthly chart, we are making a very powerful bullish reversal structure. Last month, we did what seems to be a crystal clear ignition bar, in my humble opinion. And right now, we are breaking the previous top. We are breaking the $459.44. This is very promising. Now, one of you guys said to me in the comment area in our last video that this could be a cup and handle chart pattern, right? Well, who am I to disagree, right? I'm just a retail trader like everybody else over here. But in my humble opinion, this is just a bullish pivot point, right? Just a bullish pivot point. One of the most powerful bullish reversal structures, all right? Because a cup and handle, to me, the leap over here should be a little bit higher, should be coincident to the previous top level, right? So this is a crystal clear cup and handle to me. I would favor to see the lip of the cup around the previous top over here, but still, okay, maybe you are right. Maybe this is a cup and handle. Either way, the key point is $459.44. Either way, this is your main resistance level over here. Now, if we take a look at the daily chart, we see that we are clearly breaking this resistance level. There is not a single bearish reversal structure. We are clearly bullish. Of course, we struggled a little bit below our main resistance level over here. We did some bearish reactions over here, but still, we are quite, right now that we are breaking this resistance, we are quite bullish again. We completely rejected any bearish possibility, all right? So we are now clearly bullish. We don't see any bearish candlestick pattern over here. So, all right, the main trend, mid-term speaking, is still bullish. What's the problem here? The problem is that today, specifically today, it is one of the weirdest days I have ever seen. We don't only see SPY and QQQ going up. We see VIX going up as well, and roughly all the mega cap stocks are dropping today. Look at SPY's candlestick today. Clearly bullish, right? Look at this candle over here. Clearly bullish. QQQ, clearly bullish, above yesterday's high. Now, if we take a look at Apple, dropping. It is approaching the 21 EMA, the exponential moving average. Microsoft, it is going up, but it is way below Friday's close over here. So we are clearly dropping. Google clearly dropping. Google gapped it down today, and we have yet to recover to yesterday's close. Amazon, it is also dropping. We retested the 21 EMA on the daily chart. We are far from Friday's close as well. Berkshire Hathaway is the only one that is actually going up today because Tesla is crashing. It is making a bearish candlestick pattern approaching the 21 EMA again. And we don't see any meaningful bullish reaction today, but still, we are dropping. We are maintaining the midterm bullish bias over here. We are still above the 21 EMA, but still, it is quite problematic to see such reaction. And the Nvidia crashed as well. Nvidia lost the previous support level at the 38.2% Fibonacci's retracement, and right now we are recovering very good. I expect that Tesla is going to follow Nvidia's example over here and make a nice intraday recovery, but it is still a bearish candlestick. We are still below Friday's close over here, so this is quite problematic. Now, how is that possible? The indices are up while the mega cap stocks are mostly down. Meta is down, it is crashing as well. So what is happening here? If we take a look at the heat map, this is your answer, right? Few stocks are down today, but the problem is that apparently only the big ones are down, right? Just take a closer look at this heat map over here. The red ones are the biggest ones, while the smaller ones are the green ones. Mostly speaking, the market is up today, but the mega cap stocks, for some reason, are down. Honestly, I don't know why. If you know why all the mega cap stocks are down today, but the entire stock market is up, please leave a comment. I always read the comments and I always answer the comments as well. Even if you say good morning, Nathan, I'm gonna answer you back. Good morning to you too, my friend. So yes, leave a comment. I always read them. Now, for some reason, the mega cap stocks are down today. Okay, great. I don't believe that such divergence between the mega cap stocks and the indices is going to persist for too long. Eventually, they are going to follow each other. Now, the real question is, which one is lying here? Will the indices drop to follow the mega cap stocks, or will the mega cap stocks follow the good mood seen on the indices? Eventually, one of them will prove right. I don't know which one, so this is quite problematic. Now, if we continue our analysis over here, we see that SPY broke the previous top level. It broke the yearly high over here along with QQQ. Great. They all broke the yearly high. QQQ broke this bullish flag chart pattern upward. So in my humble opinion, the bullish rally is supposed to persist. On the monthly chart, tech stocks are performing insanely well. Just like the S&P, just like SPY ETF, we see a bullish pivot point. QQQ triggered this pivot point last month. This is a very good signal for tech stocks. In my humble opinion, the market is supposed to remain bullish. Of course, short and mid-term pullbacks might happen. This is a plausible scenario. We could see a pullback all the way down to the $387 or maybe to the 21 EMA again, and this is it. That's totally normal. That's okay. That's expected. That would be probably just another buying opportunity. Now, because when I see, sometimes I see people panicking when they see a top signal, right? But I always tell you guys, always wait for confirmation. We saw a bearish reaction here on December 6th. We saw a bearish reaction on November 29, bearish reaction, November 15, bearish reaction, November 9. We see many bearish reactions everywhere. But without confirmation, clear confirmation of a top signal, you can't trade, you can't sell, you can't short. All right, always work with strategy. Don't try to sell the top and buy the dip every single time. For some reason, most people want to catch reversals, while most of the time they would be better off just following the trend. You know what they say, the trend is your friend. When Charles Dow, the father of technical analysis, creator of the Dow Jones Industrial Index, and founder of the Wall Street Journal, developed the Dow theory, he would not believe that so many people would ignore the last principle, the tenet number 6. Trends persist until a clear reversal occurs. Yes, it's possible to trade reversals, but it is important to see a clear reversal structure on the charts before taking the risk. And most important of all, work with a strategy, because this is what will give you something that every trader wants: consistency. Otherwise, this isn't trading, it's just gambling. Now, let's take a look at Tesla stock over here, because Tesla and Nvidia are the most interesting stocks right now at this moment, in my humble opinion. Tesla is above the 21 MA, at least, right? Because Nvidia right now is trying to lose the 21 MA, but still, it is maintaining the bullish bias. I don't see any crystal clear, amazing top signal. I don't see any bearish structure that is strong enough to convince me that Tesla is going to frustrate this bullish sentiment completely. I don't. In spite of today's drop, this is not, I don't see such reaction. This is not enough to convince me, at least, all right, at least. Now, I do agree that Tesla is in a very critical, important area because of this, right? We are still inside this descending channel, just like QQQ were a few weeks ago, right? We had this descending channel on QQQ, but QQQ did an upwards breakout. I do believe that Tesla is going to follow QQQ, but we gotta see a crystal clear confirmation of a breakout first. We gotta see Tesla closing above this descending channel, outside this descending channel on the weekly chart. Then we are gonna see a real confirmation, long-term speaking, that yes, Tesla is now prepared to fly again. It is prepared to recover and probably retest the next resistance level, the $300 area, which is the previous top level from July 17, which is the yearly's high over here. So yes, we gotta see for a crystal clear breakout over here. Meanwhile, we do see some interesting movements, mid-term speaking, but right now, Tesla is still inside this trap zone between the ascending 21 MA and the resistance level at $246. The price is getting squeezed as time passes because the moving average is ascending. It is squeezing the price against this resistance. Eventually, we're gonna see a breakout. We just don't know to which direction this breakout will occur. Now, Nvidia is dancing around the 21 MA over here. It is trying to resist the support level at the 38.2% Fibonacci's retracement, but it feels to me that we gotta break $476. By breaking this red line over here, which was a previous top level, which was a previous support level 1, 2, 3, 4 times, and right now it is acting as a resistance level again. Only by breaking this key point, Nvidia will truly fly again. If Nvidia breaks this key point over here, it is going to retest the $500 next. I do believe this scenario because the 500 is the next technical resistance level, as we can see on the daily chart and on the weekly chart, especially on the weekly chart. And by the way, if you do want to trade with me, join our Telegram channel. The QR code is right here on the left corner of your screen, because there we always work with strategy. We always work with technique. So if you need help achieving your own consistency, join our Telegram channel, right? The QR code is right here. Now, it is very important to see Nvidia reacting this week. Okay, we are not starting with the right foot over here, but still, I do believe there is time for it to recover and break the previous resistance level. I don't see a meaningful top signal yet, but if we do, what if Nvidia actually tops over here? Then okay, probably we are going to retest the 61.8% Fibonacci's retracement next, just like Tesla could seek the $226 again. So far, the situation is under control. It is a little bit strange, right? It is quite rare to see such divergence between indices and stocks, but I do believe that soon we are gonna see something very interesting. So remember to subscribe to this channel, because I'm here every single day keeping you guys updated on Tesla, Nvidia, SPY, QQQ, etc. So join the Finance Hydra channel community. I highly appreciate your support, my dear friends. Thank you. Stay safe. Bye bye.